Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 22nd of March 2019. I'm Darren Sinden, and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off as ever with a look at the overnight changes and price moves to be aware of. And to be brutally frank, there weren't too many moves of note in the global foreign exchanges yesterday. Markets really marking time. It appeared. Those moves that there were, we should point out first of all in cable, the British pound against the US dollar. The pound rallied off of session lows to gain by 0.14% over the last 24 hours. However, the real story is in the weekly move, and the pound sterling has eased by just over 1.1% against the US dollar over the last 7 days. More news on the pound and things affecting it a little later on in the video. Elsewhere, what looks like some profit taking in the Aussie dollar after the bounce on yesterday's unemployment data. That's finishing the week down by 0.10% against the US dollar. Elsewhere, the Brazilian real was under pressure, at least yesterday, against the US dollar, where the dollar took 0.49% off of the Brazilian currency. But that doesn't really tell the whole story either, because over the course of the last week, it's the real that's been gaining and is up still by around 1.27% against the US currency. Speaking of the dollar, dollar index down fractionally yesterday, down by 0.03%. But over the course of the last week, the dollar index has given back just over 0.31% in that trading session. So a bit mixed, really, I suppose, is the picture. And we'll see what the data, which there's plenty, will do for prices before the New York close tonight, of course. Okay, what's on the calendar? Events that may move the markets today. Pretty packed calendar. We kick off at 8:15 GMT with a speech from the ECB's de Guindos, and then at 8:30 the first of PMI releases today, and this takes the form of composite manufacturing and services PMI preliminary readings, these all out of Germany for the month of March. And then at 9 AM GMT we'll have manufacturing and services and composite data out of PMI, that is, data out of the Eurozone. So hopefully for traders a chance to infer something from the German data in those 30 minutes ahead of the EU-wide data. Of course, both sets of data had been on the weaker side since the turn of the year, and it'll be interesting to see if there's any pickup whatsoever across those readings. 10:15 and we stay in Europe for the second central banker speech of the day. This time it's the ECB board member Mersch that's speaking. And then we pause until 12:30 and we cross over the Atlantic, but not to the USA in the first instance, but to Canada, where we'll see a raft of inflation data, including retail sales, consumer price index data, and the Bank of Canada's own price index measures, core and non-core. 13:45, we're back in the USA for their versions of the market manufacturing PMI services and composite PMI data, again all for the month of March. And then at 1400 we have existing home sales for the month of February. And finally at 1800, the last high impact data of the day, the monthly budget statement out of the US for the month of February. Okay then, breaking news and comment that's caught my eye overnight. And first of all, EU leaders have offered a Brexit delay. The UK can delay Brexit until the 22nd of May if UK MPs approve Theresa May's withdrawal deal, or until the 12th of April if they do not. So it's a contingent delay. It's also a bit of a difficult offer because, of course, the Speaker of the House of Commons already said that Mrs May can't represent her original deal to Parliament for a third time. So it's hard to see how MPs can vote on that move. And so a no-deal exit still looks a potential possibility under those circumstances. US authorities moved to tighten sanctions against North Korea, and this is the first such move since the failed summit between the country's leaders in Hanoi last month. Meanwhile, core inflation in Japan slipped back to just 0.7% in February, below forecast for a read of 0.8%, and January's reading at the same level. Meanwhile, manufacturing PMI in the country remained in contraction during March, with the index registering a read of just 48.9, the lowest print in that figure for 3 months. Right, time for food for thought and something to take away with you into the weekend and beyond. And we're going to stay with Japan as a theme. 3 charts here focusing on Japan and some of the issues that they faces, or that the country faces, I should say. So first of all, as we just heard, Japanese manufacturing PMI remains in contraction. Here's a long-term chart that plots the manufacturing PMI against producer price inflation, i.e. factory gate inflation. And there are some worrying signs here, both the PMI and factory gate inflation trending lower. What we wouldn't want to see, of course, is a continuation of this trend, because that would smack of deflationary pressures re-emerging in the economy. Staying with industry and business for the moment, come to our larger chart here at the bottom. This plots exports and imports into and out of Japan. Now, exports have been rising recently, but there's been a worrying decline in imports. Remember, of course, Japan is limited in terms of the natural resources it has in its country. Imports lots of goods and services, typically adds value and then sells them on again as finished goods. That's happening at the moment, but this downturn in exports does suggest that downturn in imports rather does suggest that businesses are concerned about future order values and new orders coming through, and maybe that's a warning sign there of falling demand. Finally, a look at core inflation against consumer spending. For the moment, consumer spending here in the dashed line is holding up. Core inflation, as we've heard, is dipping. This is the light blue line. What we wouldn't want to see, of course, is this take a further turn for the worse towards negative territory, whilst at the same time Japanese consumer spending contracts. So again, that's something that I'll be watching over the weeks to come. Okay, thank you very much for your time today. Please do take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. And as I say, do take the time to read this risk warning thoroughly, please.